What's going on, guys? Welcome back to Zero to a Funded. This is episode 11, I believe. Today we're going to be talking about my strategy. It's going to be combining a lot of things that we have previously talked about, such as price action reading, our zones, and just general psychological things that we're going to go over. Pretty much the way that I trade is how I'm going to teach you guys to trade. And I think that a reason that it's so popular and a reason that I like it so much is because that, one, it is a very specific model with specific set of rules. You only are really mainly looking at one time frame, and it's very easy to understand. There's not too much about it. I think one of the biggest things that a lot of people get kind of entrapped into when they get into trading is like ICT concepts, SM smart money concepts, all of these different kind of things, and they are very, very confusing, and there's a lot of different, quote unquote concepts, and I think it's very overcomplicated, especially as someone who is newer in the market. The way that I trade, I look at what the candles tell me. We've gone over it multiple times. Each candle tells you a story, and you can read price action and read what price wants to do just based off of the wicks and the bodies, and knowing exactly how to read them can be such a huge advantage. Pretty much the way I trade is just trading with the trend and engulfing candles, and I'm going to be going over that. And then we're going to also touch on how you can put confluences together to create your own strategy. So I'm going to give you kind of an outline on what you can do to go ahead and create your own strategy. But this is going to be kind of a little trade recap as well as a tutorial on exactly how to trade my strategy. Now, there is going to be a more in-depth video on my strat on my channel. If you'd like to go check it out, I will go ahead and put the card up over here. I believe that it will be, and you can go ahead and click on that. That's going to be a very in-depth. I'm going to go decently in-depth into it on this, but I also want to touch on how to create your own strategy. As I mentioned in a video a couple videos ago, I said I don't want you guys to copy exactly the same way that I trade verbatim, like literally word for word or rule for rule. I want you to kind of put together bits and pieces that you've learned from everything, whether that be from me, from someone else, maybe something that you've seen online, or the best thing is going to be from your own pure market experience. My trading window is from 9:30 a.m. Eastern to 11:30 a.m. Eastern. That is going to be a 2-hour trading window, and we are going to be strictly on the 3-minute time frame. Now, you can sometimes use other time frames to kind of give you extra confluence, and anything that you'd like to do to give you extra confluence on top of the model that I'm going to show you is absolutely fine. Now, the first rule of this strategy is going to be that we are pretty much we're always going to want to be playing with the trend. So as far as the rules go, we are always going to be playing with trend, right? We're always going to be having a bias, whether that be long or short. And I'm going to show you guys how I switch my bias intraday because it does change many times throughout the day. So we're always going to be playing with the trend on the 3-minute time frame. The second rule is that, once again, we are going to be trading from this 9:30 to 11:30 a.m. window. And we are going to be trading with between 2 to 4 micros per trade on a 50K account. This is exactly what I do and has made me a decent amount of money and will continue to do so. Anyway, going into open, you can see that this is going to be a little trade recap as well. I'm going to show you guys the trades that I took today. But pretty much, as you can see, going into open, there wasn't a very defined trend. You can see we were kind of chopping around a little bit. So I'm waiting for open to see what go ahead and happens. Boom, right off of open, we dump. Now, I am going to have a bearish bias here. The reason I have a bearish bias is, well, because that's a very bearish down move. We also had these lows that we were holding repeatedly. Kind of just around this area. Boom, 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 boom. Broke out of it. Now holding below it. Now we also have this low. But right now, I am bearish. You're always going to be looking at pretty much the most recent move. This is kind of a shorter, TP and SL. Your pretty much maximum SL is going to be 80 points. I don't take any trade if the SL is over 80 points. And they are going to also have 2 TPs, which is going to be a 1-to-1, but I'm going to show you how to do that in a second. The first thing I'm looking for in a downtrend, if I have a bearish bias, is a pullback candle. Now, a pullback candle, by my definition, is simply a candle close in the opposite direction. So right here, if I have a bearish bias, I'm going to want to see a green candle close. Let's see if we get one. Okay, we get one right here. Now, it can be any of the last bullish closes, right? So I'm going to show you the exact model. I'm going to actually show where we got a setup, and I'm going to show you exactly how we traded it. So the first setup actually occurred on this candle right here. Now, what I was saying is that the pullback candle can be any of the most previous bullish candles in this case. Obviously, if we had a bullish bias, we'd be looking for a red candle closes or pullback. But in this scenario, since we have a bearish bias, as you can see, we are in a downtrend, we are going to be looking for a green candle close to consider our quote-unquote pullback candle. This could be it. This could be it. This could be it. Now, what I'm looking for to actually execute my entry is a candle that shows me pretty much that sellers outweigh buyers in this area. Now, how you can tell that this is happening is by an engulfing candle. Now, this is pretty much the way that I trade. What I always look for, if I'm looking at this candle, is for one of the next two candles on the 3-minute to wick below, at least wick below this and have a very strong bearish close, right? Once again, pretty much just reading price action. Right here, I can see that we started to hold this low a little bit. We had a pretty strong pop up. Buyers kind of stepped in. Boom, sellers instantly rejected them down. We also have this top wick, and look at that. We are also playing in line with that bigger trend, as you can see. Right, strong move down off open. We held it. Buyers tried to show some strength. Sellers instantly came in and said, fuck y'all, we're pushing this bitch down. I enter at the close of this candle, since it is above the bottom of this. Now, of this line right here. If this candle was to close, down here or anywhere below the bottom of the wick of the pullback candle, I would set a limit order at this line right here at 20,794. And I would wait one candle afterwards to get filled. But since this closed slightly above where I ideally wanted to get filled, I would go ahead and fill right here. Now, what I do to quickly find my TPs is this. I have a Fibonacci retracement tool that I set just like that. Little pro tip, if you click on your Fib tool, which can be found over here, Fibonacci retracement, and I'll show you guys the settings I have for it in just a second. This really goes for anything in your quick tool on your drawings on TradingView. If you hold control and you kind of drag, you can see how my cursor is kind of snapping to everything. If I let go of control, you can see how it's just hovering down here. But as soon as I hold control, you can see how it kind of snaps. Little TradingView Pro hack right there. I put my Fibonacci from my entry, which is right there, to my stop loss, which is going to be at that high that we just created upon that entry, which is going to be right here, right? We had to move up and move down. The high is at the top of that wick. I take my entry right here. This is a 54-point stop loss, okay? When you're just starting out on your 50K account, once you've built up your drawdown, you can start to size up a little bit and play accordingly, but you want your max loss to be no bigger than $320, as I explained in my last video, where we talked about prop firms mathematically. Since our max SL is 80 points, anything over a 40-point SL, we want to be half-sized, which will be 2 micros. Anything under a 40-point SL, you can do 4 micros. Now, what I've started to do is size it more accordingly so that my max loss or my loss every time will be around $300. So on a 54-point SL like this, I'd probably go in with 3 micros, and that would probably be around a $300 loss. But I would recommend following this rule if you are just starting on your accounts and you are working with just the default drawdown. Anyway, this is the setup right here. You execute your entry right here. Your first take profit, you're going to trim half of your position and then move your stop loss to break even after hitting that first take profit. Now you can see we nearly got stopped out of this trade today. Became actually very, very, very close to getting stopped out. 1.5 points away from getting stopped out on this trade. And guys, look what ended up happening. We ended up hitting first take profit right there. After we hit first take profit, we move our stop loss to break even. Okay. Boom. We ended up getting stopped out at break even on this trade, unfortunately, after coming very close to TP2. But that is still a dub. Yes, we only trimmed half our position, but that is still a dub. So in this case, if we were in 2 micros, we would trim 1 micro right here, and then we would stop out at break even. You can run a 1-to-1 with this strategy, meaning that you would get all out of your full position at the first take profit. It's really up to you. Like I said, I want you guys to test this on a demo account if you are really going to want to be trading it the exact way that I do, right? But it's up to you guys. I'm giving you guys the outline of the exact way that I trade, and you can do with it as you wish. Right here, we start to make a little bit of a move up. Now, I probably wouldn't switch my bias to bullish until we got above these highs right here. These highs right here are pretty strong intraday levels that I would like to see us break above in order to flip my bias to bullish. Or if we created some kind of intraday high right here and then broke and held above it. Hopefully you guys can see how I'm pretty much just reading price action and using intraday levels and just my general knowledge of how the market moves to find entries while also using a specific model. Anyway, let's go ahead and see what happens. Now we're waiting for another entry. I am personally still bearish until you can see how we came off of this high pretty strongly. Now I would consider this a pretty strong high also, as well as kind of exiting out of this zone or rejecting out of this area. Now I'd say, okay, if I was to see some momentum above this high, I'll probably switch my bias to bullish. My bias can switch constantly throughout the day, as you can see here happening right now. Didn't get an entry for the rest of the day, actually. Even right here, you could have flipped to bearish right here after seeing, we kind of started to consolidate. But like I said, this strat is really always going to want to be played with the trend. If you're ever in an area where you're kind of unsure, it's best to just keep your hands off. Right here, I was pretty sold on a downtrend, and it was pretty obvious to me. Right here, when we start to chop around a lot like this and you're kind of hesitant, it's best to just stay out. That's a general rule of thumb when playing with the trend. If you're unsure of what the trend is, that means that you are pretty much in a pretty, strong area of consolidation. And if I go onto the 1 minute chart, you can see how strong this consolidation was. Down, up, down, up, down, up, down, up, down, up. And then we actually started to, even come down, up, down, up, down, up, down. This was some of the worst consolidation I've ever seen. And then we ended up breaking out into the upside. Now, this is more, again, where I would look for a trade setup. You could possibly take it here. Now, once we've confirmed a bullish uptrend, now I only trade between 9:30 to 11:30, so I would have been done trading by now. I was done trading by now today anyway. But just for the example's sake, I'll go ahead and show you guys another setup that I could have found over here. So now that we've broken above these highs and also started to confirm this uptrend, right? Now I can look at this and say, okay, we are very obviously trending up right now, right? Back here, I was very confused. We were chopping up and down, had no fucking clue what was going on. But right here, I can see we are on a clear uptrend. Let's see what happens. Right? We got a pullback candle right there. Now this is going to be the opposite. So over here, had a bearish bias. Now we have a bullish bias. So this is perfect. We got a pullback candle. Remember earlier I said we always want to look for a pullback candle. If I have a bullish bias, that's going to be a pullback candle is going to be a red candle close, which we get right here. I'm going to mark out the top of the wick of the pullback candle. I want one of the next two candles to close green and at least wick above this and have a strong bullish close. The first one, that's a very strong bullish close, but it does not at least wick or get above this high or that line that I marked out, which is the top of the pullback candle. This candle does. I would say that is a decently bullish candle as well. So what I'm going to do is take my entry at the close of that candle. If it's not too high, if it was to close up here, I would wait for a pullback till right here and then fill right there. But since this candle closed pretty much just barely above where I wanted to get my ideal fill, which was right there, I would go ahead and fill at the close of that candle. Put my stop loss at the low that we just created, as I said earlier. Also, by the way, here's my Fibonacci settings. It's just I have the extended lines right. 0, that's your stop loss. 1's your entry. 2 and 3, are your TPs. We take our entry right there. We are very obviously in an uptrend. As you can see, if I go out onto the 1 minute, it is even more clear to see what our trend is. It is very obviously bullish. You can see if we zoom into the 1 minute chart as well, buyers stepped in right here or sellers stepped in right here, started to push a little bit down, and then buyers took over back control. If I go out on the 2 minute, you can look and see how we started to get that buying pressure back after a pretty bearish candle right here. Buyer step back up, as well as the 3-minute. You could even go ahead and look at the 5-minute if you like. You can see, look how strong that 5-minute close is right there. Also, after breaking out of these highs, let's go ahead and see what happens here. I actually didn't take this trade. Now, this is going to be a 17 or 18 point SL. So going back to our rules, in my case, like I said, you would want to be in at least 4 micros. I personally would probably go in this thing with probably 6 micros. An easy rule of thumb is 5 micros is pretty much just times 10 of the points. So if you were in 5 micros, an 18-point SL would be $180. So I know $180, if I want my SL to be around a $300 loss, if I want to risk around $300 on this trade, I'll probably go in with like 6 micros. That would probably be about maybe I would go in with like 7. That would probably be like a $250 loss. Let's see what happens. First take profit hits right there. Move our stop loss to break even. Full take profit hits right there. Boom. If you were in that with 7 micros, I'm not exactly sure how much that would be, but it would be a decent amount of profit, right? So generally speaking, this is a good rule of thumb to go for as far as your sizing on a 50K account. But the more experience you get and knowing how the sizing of contracts works, you can kind of just on the fly know how many you should be in order to be risking $300. Like, I've pretty much been trading for so long that I can look at this stop loss and be like 18 points and be like, okay, in my head, I'm like, okay, that means 5 micros would be $180 loss. That means I could probably go for like 7 micros on this trade, and that would probably be around maybe 2. I'll guess maybe 270 off the dome is what that would be. Maybe 270, between 270 and 300. But boom, look at that. We hit full TP. And guys, that really stresses the importance of playing with the trend. It's a lot easier to catch a move up when we are so obviously trending up, or right here, so obviously trending down, than it is when we are in here, right? When you start to see something like this, just back off and say, okay, I think I'm just going to wait until we either crack these lows or crack these highs, because both seem to be pretty strong. You know what I'm saying? And as far as this trade over here goes, as far as your discipline goes, you can see that this trade nearly got stopped out. A quick little disciplinary thing. Guys, when you're trading, it's very important to not cut trades early, whether that be cutting them early while you're in profit or cutting them early while you're down in drawdown. This can be because you can come 1 point away from your stop loss in a 53-point trade and then end up catching a 100-point move. It's happened to me countless times, and the amount of times that I would see someone say, oh, I just stopped myself out here because I thought we were going to hit SL for sure. And then boom, they just missed out on this huge move that we caught today because they got scared out. And guys, that is where your discipline and your psychology as a trader really comes into play. Because when you backtest, which is what I'm doing right now and replaying the chart, I'm able to just click through it super fast like this. But what you have to realize is that each one of these candles took 3 minutes to form. So I was in this trade right here before I hit TP. I was in drawdown in this trade for about 30 minutes. And I was watching my P&L fluctuate up and down for 30 minutes. So in hindsight, it's easy to click through this and be like, okay, we got a short setup here. And then I just spam click through here. And then I'm like, okay, great, that was a dub. And I write that down in my journal while I was backtesting that would have been a dub. The biggest thing that's going to separate a profitable trader from a non-profitable one is being able to keep that same mental fortitude during the live market. Demo trading and backtesting are really, really good, tools, and you absolutely should utilize them. But if once you get onto the actual live market, you're not keeping that same mental fortitude, you are going to just screw yourself over. A lot of new traders would feel a lot of emotion being in drawdown for over 30 minutes and watching their P&L be red for 30 minutes straight and coming this close to their stop loss. A lot of new traders would be shitting bricks. They would close their trade early. They might cut this loss and say, oh, they might get scared out of it. And then look at what happened, guys. That is why having a model, in my opinion, is very important because one, it makes you know exactly what you're looking for and you have a specific set of rules to follow. And, it kind of pulls you away from feeling like you're forcing a trade, which was one of the biggest things for me. Was now at the point where I'm at, where I've had so much market experience and I've been trading for a really long time and my emotions are really not of worry to me anymore. I can pretty much trade. I can use this model as more of an outline of the way that I trade, right? But if you are newer to trading, you need this kind of, I don't know the right word, but you need this kind of set of rules to keep you in check. And then as you get better and as you progress more, as your mental grows stronger, you can kind of, you can kind of loosen the collar a little bit, I guess, right? The biggest thing is this, and this is literally I'm really glad that this is actually what happened today because this is just such a perfect example. It's so easy when in hindsight I look at this and I just click through it, but during the live market, and if you guys haven't been trading yet where you're risking real money, and I hope you haven't been, I hope you've just been kind of practicing on demo or maybe just back testing using the replay feature on TradingView. I hope that you guys realize that it's a lot easier said than done, right? It seems trading is one of those things that on paper, like on paper accounts, it seems so easy, right? There have been so many times where I'll have people come to me and they'll go, man, I had no problem on my eval account. I passed my eval account in 2 days, but once I get to that live account, I keep breaking my rules and I don't know what's going on and I can't get a payout. But I could pass the eval like that. But once I get onto the live account where I know that, oh my God, this is serious and I'm pretty much right here. I just need to keep following my rules and keep taking good setups and I could get a payout. I could get real actual money from this, right? Once that, you can't make real money from an eval. So you don't really care what happens on that because you know that it doesn't really matter. You're only risking the $50 that you paid for the account. But once you get onto that live account, whether you know it or not, there's a switch in your mind that flips. And even subconsciously, if you don't realize it, you're going in your head, your subconscious, oh my God, like every like it matters, like this actually matters, like this is real, like I could really make money from this. And once you lose that mentality where you're so over fixated or hyper fixated on this idea of making money and being so stressed out that you're worried about every minute dollar and every single minute detail of every trade that you're taking, and you kind of just loosen up a bit and just take good trades and follow your rules, that is when you will break through, right? Because I know people who trade my strat and stop themselves out of this, and then they see this move, and you know how that do you know how that you guys will experience this as a trader. If you stop yourself out of this early because you think you're going to get stopped out or you get scared out and then you see this move that you missed out on, that's going to take a huge toll on your mental and you're going to be thinking about it all day. It's good. That shit's going to haunt you at night. You're going to go to sleep and be like, damn, why the fuck did I stop myself out of that trade? I literally could have caught this 100-point move. That's what separates profitable traders from non-profitable ones. It's not their strategy, right? Obviously strategy matters, but it really doesn't. Steph, my closest friend and one of the people, my trading mentor and one of probably the best trader I know I have ever met, and I witness it every day. If you asked him how he trades, he wouldn't even really be able to tell you. He doesn't have a model. He doesn't really, have a specific set of rules. I have a set of rules, but like I said, I use them more so of an outline now. He just trades what he sees, and he has so much discipline, and his mental when it comes to trading is so solidified, and he's had so many years of experience in the market and he's so emotionally disconnected from the idea of the money or the idea of the risk, and he's just, he just shows up, and it's just business is business, right? I'm not afraid to admit that I have blown a lot of accounts, even recently. Right, I'm currently in the process of trying to get max allocated on Top Step, And I blew a lot of accounts because I've just been full porting them just because I'm trying to get to the Express as fast as possible. I don't recommend you guys doing that, but I'm in a position where I, one, can afford to, and two, I'm able to flip that switch in my head where once I get onto the XFA, I'm like, okay, now I have to be back to following my rules. And I'm confident that I won't blow the live account. But it's like, the thing is, like, I don't even care about losing a trade, right? I felt the same way about this trade when price was right here and when price was right here. Yeah, sure. Right here, I was down around $300. Right here, I was up after trimming $400 or $500. I can't remember exactly. It was a pretty good amount. I ended up the day around $400 just from this trade. It doesn't matter to me. The outcome of the trade does not matter. All that matters to me is that I followed my setup and I followed my rules and I followed my model and this outline that I have set up for myself that I know will be profitable for me in the long run. Once I enter a trade, I set my orders, and I barely even look at the chart. I don't even think about how much money I'm going to make or lose. You guys need to be focused on becoming a better trader and taking good trades. You need to be focused on winning trades and not making money. It really goes for anything in life. If you focus on the outcome, you're going to just subconsciously end up screwing yourself over. Obviously, everyone gets into day trading because they want to make money, right? My goal from trading is to make money. Steph's goal from trading is to make money. That's everyone's goal. Obviously, we can all agree on that the common goal as day traders is to be profitable and make consistent money. But the problem is, the more you focus on making money, the outcome is it's going to be so much harder for you. The less that you think about making money, the better you will be. And it's a very hard concept to wrap your head around. It's kind of, the less you care about this shit, the better you will do. And it's going to be very hard as a newer person to realize this, because I've mentioned this before. You're taught, or your whole life, this thing where the amount of work you put in, the amount of, results that you get out is kind of this direct correlation, right? This direct relationship. Whereas one goes up, the other goes up. But what you'll come to learn is that it's kind of the opposite. I don't think about trading at all, except for my 2-hour window. Sometimes it's even less. If I take a pretty good dub on the day, and I'll just call it like today. I ended up this trade around 10:30. And I pretty much just called it after that. I was up around $400 on the day per account. I pretty much just called it there. That's the only time today that I thought about trading, right? Sure, maybe I thought about it 10 minutes after. So it's just weird. That was kind of a rant, guys, and that is my strategy. I know I didn't go too much on putting your own strats together, but all strats consist of a methodical way of doing so, and a set of rules. And your set of rules needs to be a session, a time, how you're going to be trading, your exact entry. You need to be knowing exactly what you're looking for on the chart, and also your sizing depending on what size account you're on. This was a bit of a longer video, guys, and I got into a pretty deep yap right there. So if you made it all the way to the end of this video, you are an absolute real one. And I really hope you're taking everything I'm saying to heart. But if you're new, you probably won't, just because it's hard for you because you don't really understand yet. But you will, and that is perfectly okay. But with that being said, thank you guys so much for watching. Make sure to hit that like button and subscribe if you are not already. It would mean the absolute world to me. Thank you guys so much for all the support recently. It's been amazing. Love you guys so much. I'll see you later.